Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning on February 7th. So the title of my Growth Investor issue this week was Resiliently Mixed, okay? On one hand, it's hard not to be encouraged with the resilience of the market. We had the DeepSeek implosion of AI infrastructure stocks, which was one of the leading groups. This Monday, we had some tariff, news over the weekend and some freak out about that. And some of them were pulled back for a month. Some of them went into effect, I think, on China. But the market held itself in there pretty well. Plus, so far, a lot of stocks there's more stocks nosing higher than breaking down. And I would say on balance so far, earnings season has gone, pretty well. I mean, there's been some nice stocks, important stocks that I look at, growth and glamour names, that have popped higher. There's always going to be a couple of, potholes out there. But for the most part, it's been pretty solid. With that said, when you kind of step back, I would just say that the market remains in a trading range. Now, coming off a huge run last year and some speculation in December, that's not the worst thing, bigger picture. But just for the here and now, most indexes, almost all major indexes, growth measures, sectors, they're just kind of gone nowhere here for 7 to 10 weeks, okay? And usually right now, we're kind of near the top of the range, we're getting kind of encouraged, and then in a trading range, this is when things kind of sell off. Then you become discouraged near the lows. So we'll see how it goes. I do see more good than bad out there. I am optimistic the next, big move, so to speak, will be up, leading stocks in the market. But things can be very choppy. We're still in the middle of earnings season, and finding good entry points in some of these stocks, and I don't really want to buy right ahead of earnings, is a little tricky, okay? So we're still about 45% cash in Cabot Growth Investors model portfolio. That could change. We'll see how earnings goes next week. There's quite a few stocks reporting that I'm watching. So we could be jumping on some of those. We could be putting cash to work, but we'd really like to see the market, the indexes, some of these growth measures. It doesn't have to be 1999 out there or 2024. We'd like to see them start to hit new highs and for the trend to truly turn up before getting heavily invested. Okay, let's hop on the charts as usual. I'm using a program called Market Surge. It's a product of Investors Business Daily. You can learn more at marketsurge.com. So we'll start as always with the NASDAQ here. Now here was this day was your DeepSeek, freak out. And then we had kind of an ugly day last Friday, and then we came in Monday on the tariff news. Again, though, the fact that it's just kind of held, if you didn't know the news and you just kind of came back from a month-long cruise or whatever, you would just say, oh, we're just chopping around in this trading range. And that's really what we're doing here. Okay, 20,000 or so on the high, 19,000 on the low. We'll see how it goes, okay? Until we really get going, though, number one, there's always the chance that we do correct and that this is some sort of longer top, or I'm not saying a huge bear market, but some sort of quote-unquote real correction. Number one. Number two, even if that's not the case and we just chop sideways, it just tends to, mess with individual stocks that might get going for a few days, and then they pull back, that sort of thing, okay? Other indexes are generally, again, there's more, when I look at the S&P 500, I would say this is more good than bad, right? I mean, it's above the 50-day. It's a stone's throw from all-time highs. That's good. That said, there's not really a lot of progress here for the past 7 or 8 weeks, and, you'd like to see that change. Same thing, we'll do the IJT for the S&P small cap. They continue to lag. The MDY for mid caps. Same sort of thing, just kind of no progress for a while. The New York Composite does look better, probably because of financials. So this is the one that I would say is kind of, had a correction, and now you kind of have the intermediate term trend turning up, and you can see how it's outperforming the market here in the last many weeks. But that's just kind of one of many, okay? Then you have sort of the QQQE, these things that we always go through. Again, more good than bad, but kind of still range bound. We'll see if it can kind of, not that, if it ticks up here, it's some decisive breakout, but you'd just like to see the trend kind of continue to turn up. The equal weight S&P 500 looks a lot like the mid caps and all that stuff, just kind of no progress for a while. And even, things like IPO fund looks pretty good, but kind of, again, near the top of the range, so we'll see what happens. And say the IBD 85 index, this is like stocks that have good relative strength and a good earnings track record, so less glamour, a little bit more, not stability, but growth stocks, but just sort of, real earnings and sales. Again, just kind of stuck in the middle of the range. Not bad, just kind of not great. So you'd like to see that sort of change on the upside going forward, okay? Just drilling in a couple other things because I'll get into individual stocks. I will say, I mentioned earlier, And Jacob Mintz, who's sort of the options guru here for Cabot, and I keep in touch with him most days. But just he's an old trading principle. When the financials are acting well, I'm not saying for growth stocks it means it's the best times per se, but for the market as a whole, usually if you get something, this is the XLF acting well out of the big banks, that's usually not something that happens right before the market collapses. No, there's no guarantees, but just the fact that the financials are acting well, does help. And then you know me, I always like to look at the XLP. It did get a pop yesterday from Philip Morris, or whatever they call it. Maybe it's Altria, maybe it was Philip Morris, but one of those. But overall, you can just see it's not like there's been some huge rush. There was a pop here after a big decline, but no huge rush in defensive names still, which I still take that as again, secondary encouraging sign, okay? And last thing before we get into some stocks, including AI names, watching interest rates here. So we've seen now one of our old indicators called the power index looks at the rate of change from 6 months ago, and that is strongly negative. It's not strongly, but it just means rates are much higher than they were 6 months ago. Just looking at kind of the intermediate term trend, this is the 10-year note yield like we usually look at. This is sort of the second test of the 50-day moving average, which is this orange line. And we've had a pretty nice decline here, 40 basis points. We are, picking up steam today. So let's just see how it goes. Is this just sort of another pullback and then we ramp up to new highs like we did back here? Obviously, that probably wouldn't be the best for the market. Or are things kind of under control now and the intermediate term trend is going to start turning down? We'll see how it goes. Just something to keep an eye on, as the days go forward. AI stocks continue to be I get most questions on these, or a lot of them anyway. I think and I wrote about it in Growth Investor this week. I'm not going to get into all that. That's for paid subscribers. But I'll just say, from here, what you want, looking at a bunch of names in the group, especially individual names, is you want to see, can they bounce back and come forward? The normal thing to do when this group, is super strong and then has sort of a crash, basically, is normally you'd probably bounce and then, retest or build a bottom. That's the norm. And I don't have a specific study for this, but my mind's eye says 7 or 8 times out of 10, that's what you're going to get, okay? 6 out of 8 times, something like that. When you get sort of the opposite, obviously if you can't bounce and you just kind of keep sinking, that's abnormally bad. And that just tells you, that forecasts some bad things. Not that there won't be bounces, but that the gig is up. Conversely, hopefully this dotted chart makes sense, but conversely, if you do just kind of march all the way back pretty persistently, obviously there can be down days, but pretty persistently, just boom, 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 right back to new highs, that raises the odds that this whole thing was a shakeout, okay? Right now, I would just say it's mixed. There's some names like NVIDIA that really, I'm not predicting anything. I'm just saying so far, very little bounce and just kind of stuck in no man's land going back many, many months. And then you have like a name like GE Vernova, which we talked about. It's bounced. I don't have the numbers here, but it looks about halfway back. I don't know, something like that, which is normal. Now, which opens the door to, it's not good, it's not bad. It's sort of in the middle. There are some names like, an Avago, or I should say Broadcom, a little bit better than halfway. So all I'm saying here, I don't have like a specific recommendation. I'm just saying I am watching the AI names. They're selling off a bit today. Can they kind of keep cranking higher? Can some of the laggards, the short-term laggards like NVIDIA, crank higher? Can we, Marvel, MRVL, had a really nice bounce, and then now it's, really being sold into so far today as I record this, 50-day line. We'll see how it goes. Can these things kind of just march higher from here, which would raise the odds that was sort of a big clear the deck shakeout? Or, are we seeing people who didn't sell on this day cash out now and saying, okay, now I got the bounce, I'm going to cash out? So just keep an eye on it. The growth there is still good. The numbers are still good. It might take some time, but if we do see some abnormally strong action from here, I think that would be pretty bullish for the group and for the strongest names out there, okay? Beyond AI stuff, it's a variety of names. It's pretty broad out there, although it's still mixed. I mean, even within the same sector, you'll have, some retailers getting killed on earnings and some that are gapping up or something like that. Netflix, we'll just start with the big cap. It's a $1,000 stock. I know that's not everybody's favorite, but whatever. It's just acting, big gap, big volume here, big earnings, 100% in the last quarter. accelerating sales. Well, not quite, but pretty solid sales. And just tight action here since the earnings gap. Is this going to go up 20% in the next 2 weeks? No, I don't think so. I mean, that would be great. But my guess is, the stock is acting pretty properly here. There's been no, real selling in here since the gap. So that looks pretty good. I mentioned the big cap financials. Citigroup to me still looks good. I know it's not exciting, but after last year, like I said in my webinar earlier this year, this could be a choppier. I'm not saying it's going to be all cyclicals or anything, but this could be just more choppier a little bit. It's not going to be just AI stocks and stuff like that. There's going to be some money flowing some other places. Citigroup actually has really good numbers, which is surprised me, at least on the earnings side. It looks like 3 weeks tight. It has a nice. You can see it kind of might close 3 weeks tight in here. Had a nice shakeout during the week, and recovered. I think that was on Monday on the tariff news, and looks fine. So as sort of a slower, steadier name, it looks pretty good to me. Goldman Sachs, you could pick a bunch of them. Goldman Sachs is another one, or you could just try to buy the ETF. It's up to you. Just mentioning today, we'll see how it closes. This is Doximity, DOCS. This is interesting. The stock was dead as a doornail. Let's show you the monthly chart. Came public near the pandemic top. Software company for medicals, got destroyed. It fell from 100 to 20. Okay, and then just hacked around here. You can just see it just hacked around here with nothing doing. It just got going, quote unquote, just got going last August. So relatively fresh, had a big run, consolidated, and then today, so far, it's gapping up on pretty huge volume and everything after earnings. That's pretty interesting, just kind of flagging that. Expedia, again, so that's software. We have big financials. This is Expedia. Nice consolidation here. You can see this one actually had some interesting action off the lows, 15 months ago, and then just stalled out here. But it hit a new high, built a new base, and now really reacting well to earnings. Some of these big cap liquid names, they're not, your true blue best growth stories, but they can trend. I'm not saying, again, it doesn't mean they're going to go up 100%, but they can trend. So this looks like a pretty promising gap so far today. Atlassian, back to the software side, TEAM team. This one, a lot of these, this is something I'm sort of looking at. A lot of these pandemic winners, this is going on a tangent here. They got, they had huge runs or whatever. They came public near the top. They got killed for a year or two, and then they bottomed out forever. They had a pretty good run into early 2024, and then they had these super deep corrections and consolidations last year, like 40%, 50% down. Like Shopify was one. Cloudflare, I think, was one. There's some of these things. Atlassian was one too, and you can see it really changed character a few months ago. Nice persistent uptrend. This was a much more controlled consolidation here the last few weeks, and it gapped on earnings last week, and it's held pretty well today. Could there be wobbles? Of course, but overall looks pretty good. GitLab, GTLB. This is more of a setup, newer name, but you can just see it's kind of been just Flatsville, not flat, but it's been capped here for years. And again, it had one of these big sort of consolidations last year, followed up by sort of a more proper consolidation, and now it's testing those highs in here. This is sort of emblematic of what we're seeing out there, which is it sort of tests new highs. It kind of hits a new high, then it comes back down. Nothing really decisive yet, but I will say this was the day after the AI meltdown where a lot of buying came into software stocks. I think the thinking being like, hey, if the prices are really coming down for this stuff, it could really benefit those who are going to use the AI models like software companies. So anyway, it's a good story, good numbers. It's a nice setup, something I'm keeping an eye on. Take-Two, which I do not usually go into these video game stocks, nothing morally, just because the numbers are very lumpy. It depends on product releases and all this sort of thing. But TTWO does have a really nice chart. You can see it's not the most dynamic name, pretty well situated, but nice breakout, nice flat consolidation, hard to even see it on the chart. And then you can see gapping up nicely on earnings. Again, we'll see how these things close. I'm recording this late Friday morning, but so far, so good on that. In terms of kind of more cyclicals, I mean, we're seeing a breakout. This is Hilton, HLT, certainly not a unknown name, but nice breakout from this sort of normal consolidation here. Royal Caribbean, RCL, has always been kind of the leader in the group, in the cruise ship group. There's only a few of them, of course. But again, you kind of had a lot of these nice consolidations now. We're 7, 8, 9 weeks into it, which is pretty usually the right time where enough people have been worn out, and if the stock wants to go higher, not that it's going to go, like I said, not that it's going to double overnight, but it's ready to go. Nice reaction to earnings and holding those gains, as opposed to a lot of names, hitting new highs and sort of sagging right back. This is sort of holding pretty firm. I did want to mention this is speculative. I haven't done really any work on this, but I've just noticed it going through charts this week. This is Tempus AI. It's speculative. There's no profits. Pretty good sized company though. It's using AI in healthcare, so to speak. I'm just noticing again. I think this was, we'll see what it is, but I think this was after the. Trying to get the market surge to work for me. Okay, it was the holiday, but I think it was the day of or after the DeepSeek revelation. Anyway, the volume here, my point that I'm trying to make here is the volume has just been crazy as it's come off the lows. It's not really actionable here. There's not a lot of sponsorship. It's just gone up, a bunch of percent, but it is kind of an interesting sort of, some of this AI money could come out of these infrastructure names and spread out into the rest of the group, okay? And last but not least, I mention this every now and again. I might have mentioned it last week, but I'm still keeping an eye on Bitcoin. This is IBIT or GBTC. I just think in general, in fact, GBTC probably gives you the longer view, but you just had this, you had this huge run back here, big consolidation last year, breakout for a few weeks, and now you just kind of are chilling out. It's kind of like the market. It's been consolidating normally for the last 6, 7, 8 weeks, which is not a guarantee given the huge run, given the speculation we saw, quantum computing stocks and all that garbage in December. Okay, and this is still handling itself well. Now, can it do this? Yes. So I'm not saying it's a buy. Maybe it is, maybe it isn't. But you'd really like to see this and a lot of these other things, break out on the upside with some power, ideally with a market that's, starting to really trend higher in the intermediate term. So that's my general thoughts is, excuse me, we keep, you just see here, this is the NASDAQ 1, 2, 3, 4, 5. This is kind of the sixth approach of the 20,000 level, say, or nose above it today, and it seems to be attracting sellers again. So until that changes, it is what it is. At one point, it's going to become too obvious, and we could just, people will sell it today, and then we gap up Monday and go sort of thing. That would be nice. But, until it does, you're still open to, you can't assume that we're just going to keep holding support. Every time we come down and test, it gets a little bit weaker, and we could break down. And if we break down, a lot of these names that look good, might not work, and we might need sort of a real correction to flush things out after the big run last year. But for now, I don't look too far ahead. For now, it's resiliently mixed. It is encouraging. It seems like if the market wanted to sell off, it could have, and it hasn't. So far, so good. But you'd like to see more than just buying at support. You'd like to see some actual buying and pushing indexes, stocks, sectors, growth measures, leading stocks to new highs and beyond. Okay. That's all the time I have for today. Thanks for listening, and be sure to come by again next week for another Cabot Weekly Review.